Hello investors and future investors, welcome to the channel. For today's video, I'm going to show you how to trade the Tradedesk, no pun intended. I'm going to first show you my history with the stock, and then I'm going to go ahead and show you my future with this stock. But most importantly, I'm going to show you how to use the Tradedesk in order to make consistent income. Now, if you're new to options trading, or you're trying to use options trading to make some additional income to supplement your regular 9 to 5, then you so happen to stumble onto the right video. Welcome to Investment Gains. Let's jump right into it. Welcome back, investors and future investors. My name is Tim, and on this channel, I show you how I use my portfolio in order to make consistent income. For today's video, I'm going to be going over Tradedesk. I'm going to be showing you how I trade this stock, and most importantly, this video is going to serve as a response to one of my subscribers that asked me, how did I know to get out of Tradedesk when I did? So I'm going to address that right off the bat. Now, the ticker symbol for Tradedesk is going to be TTD. Now, to be honest with you guys, I did not know when to get out of Tradedesk. The only reason why I got out of Tradedesk is because of some simple rules I follow. And I'm going to show you one of those rules as the video goes along. Now, firstly, the first thing I wanted to do is to go ahead and jump in the chart for Tradedesk. But right before we do that, I want to show you guys this highlight right here. Any stock that has extreme volatility, Robinhood is going to give you this warning. Now, the fact that this stock has extreme volatility, there is no one, and I repeat, no one that could have predicted this was going to happen. And if anyone told you that they could have predicted it, then they're lying to you. I guarantee you, no one could have predicted this. Tradedesk just released earnings. Now, the earnings they released was very good earnings. However, the stock still tanked. It absolutely crashed. Anything lower than a 20% pullback is known as a crash. So Tradedesk absolutely crashed. The reason, well, one of the reasons for it crashing is because there's uncertainty in its core product which it produces. And if you guys don't know, always do your own due diligence before investing. Tradedesk is an advertising platform, so it has a lot of competition out there. Now, let's go ahead and get into the chart. So we're going to go ahead and open up the chart. I'm going to show you how I started off trading Tradedesk just a couple of months ago. And I do have a video on this, how I traded it, where I got out, and the income I made. Just go ahead, search the channel, just type in TTD or Tradedesk, and you should be able to find that. Now, when I am doing my trading, before I get into any option strategy, there's two key indicators I have to address first before making a decision of what option strategy to get into. Those two key indicators are going to be, number one is going to be this blue line right here, which is known as the MA 200 or the 200-day moving average. Now, I like to pick up stocks when they're below this blue line right here, when they're trading below the 200-day moving average. Now, the 200-day moving average, another way to look at it is that this represents the average cost of the share price over a 6-month period. So once the stock goes below that, that's when I get interested in the stocks. And also that's how I set up my watch list. Now, when I put the line right over here, when I initially got into Tradedesk, I got in the first time on Tradedesk when you had this drop right here. Now, this was another drastic drop, but not as bad as this one that we just recently experienced. Now, the Tradedesk dropped right here, and immediately it went to the top of my watch list because I did get the alert, and I did nothing. I just kept watching it and wait for my entry. Now, it went down a bit further, and I still did nothing. I went ahead and I bought right here. The reason why I bought right here is because I always like to make sure I get clear signs that the stock intends to go back up before I get into the stock. So I saw clear signs right here and I got in here. Now, obviously, when I got in here, the stock pulled back just a bit more, which is fine. I know it shows sign is going to go up. Now, I did get out of the stock. I got in here at the price of around 60, I think it was $58. And again, I do have a video about this. Go check that out. So I got in around here, let's say $60, and I got out right here around the $73 mark. So I made a nice gain. Now, the Tradedesk is showing us the exact same thing, and you can see it right here. It has a huge drop down, and right now it's way below the 200-day moving average. The current share price, as you can see to the top left of your screen, is representative of $53.17. According to the 200-day moving average, the share price should be trading around $89, $90. That's a huge discrepancy between $90 and $53. So based on that alone, I know there could be more upside than there is downside. Now, for the downside part, we're going to go here. We're going to put a line right here. This line here is going to show you a clear level of support. Yes, there is support down here, but the reason why I say here has a clear level of support is because this graph touched the line multiple times. So hence, it's a clear, strong level of support, and that's around the $49, $50 range. So remember that I'm going to be using that to make a decision to get into an options contract. Now, the next indicator I like to consult with before making a decision on what option strategy to use is always going to be the relative strength index, or the RSI. Now, the RSI is known as a momentum indicator, and what it does, it shows you if the stock is actually overbought or oversold. Now, the chart on Tradedesk here looks absolutely beautiful. So too does the RSI. The RSI right now is around, I think it's around 38. Now 38 is pretty decent. Anything going closer to the 30 mark RSI, that tells you that the stock is going towards oversold territory. Now we're going to go ahead and we're going to go back. Now, before entering any options trade, I'm going to show you one of the most important criteria you need to look for. And for that, we're going to go ahead and we're going to scroll down. Now, this is extremely, extremely important. This is one of the things you look for before making any decision going to any stock. So here it is. Before trading any stock, always make sure you go down here. And you can find this on any brokerage. And the first thing you want to do, you want to check out when earnings is going to be released. Always make sure you're fully aware of earnings before trading any stock. Earnings can make or break you, especially if you're new to options trading. Now, you can trade earnings, and there are option strategies that are range bound that you can use for earnings. However, if you're new to options and you have just a couple of months or a couple of years of experience, I implore you, do not trade earnings. It's just not going to work out well in your favor. It may work out one time, but it's not going to be consistent. So always check out to see when you have earnings. And this is why I got out of the stock, because I know earnings was going to be this week. I actually got out of the option I had the week before, just a couple of days before. So there you go. I'm not a genius. I do not have a crystal ball. I just do not want to trade around earnings time. That's it. Quite simple. Now, while we're here, you can also go ahead and do your own due diligence and get some more information. So while we are down here, I'm going to show you something else you could look out for. So right here, we're going to see what's known as the fair value, and you could get that under the research report if you are using Robinhood. Now, right here, you could see TTD gets a 4-star. Now, that's just based on analyst reports and stuff like that. Another good thing the Tradedesk has going for it is that it recently got added to the S&P 500. So the Tradedesk is trading literally on all cylinders. Now, back to the fair value. The fair value down here is around $82. Again, the fair value tells you this is a guesstimate of where the share price should be trading. Again, this is just meant to be used as another thing before you make a decision. This is not extremely on point. So based on a fair value of $82 and the current share price of $53, once again, the Tradedesk is trading at a very reduced value. Good. We're going to go ahead now and we're going to go back up. We're going to get one more thing. Now, the day that Tradedesk released the earnings, which was on a Thursday, the next day, several analysts came out and they immediately gave this stock a downgrade. I've actually never seen that before since I've been trading. The downgrades usually come a couple of days or a couple of weeks after. The very next day, analysts gave this stock a downgrade. However, overall, they're still pointing in a buy direction. As you can see here, 62% says you could go ahead and buy the stock. Once again, this is just a guideline. The fair value, again, is just a guideline before you make a decision. Now, I did show you my history with Tradedesk. I showed you exactly where I got in, and I showed you where I got out the first time that this stock had a pullback. Now, one more thing we have to look out is the 52-week low. The 52-week low is around $42.96, or we're going to round it off to $43. However, the 52-week high is $141. So the 52-week high is more than 3 times the amount of the 52-week low. And currently, the share price is way closer to the 52-week low than it is to the 52-week high. Now, I do have all this information, and now I'm going to go ahead and make a decision. So we're going to go ahead to trade TTD options in order for us to open up the options chain. Okay, now we have the option chain open. Before I go ahead and show you what I'm going to do with the trade desk, I wanted you guys to go ahead and do yourself two favors. Favor number one, always make sure to do your own due diligence before investing. What may work for my portfolio, quite frankly, may not work for yours. Favor number two, always make sure to have an exit strategy before entering any option contract. That way, if the trade do decide to go against you, then at least you have a way to get out. So once again, these videos are for education and entertainment purposes only. Please consult a financial advisor before doing this. This is just representative of what I'm doing with my personal portfolio. So here goes. There is two things I would do with the trade desk right now. The first thing I would do would be to buy the shares outright. I think, in my humble opinion, Tradedesk is traded at a very fair price right now, which is 53.11. So I honestly believe the share price has more upside than it does downside. Now, can the share price go down some more? Hell yes, it can. We just saw the level of support is around $49, $50. So the share price could definitely drop some more. Now, I personally do not like to hold stocks in my portfolio. I'm predominantly an options trader. So me buying 100 shares of Tradedesk at this price just would not work for me. So here's what I'm going to do with it. I'm going to go ahead to buy. I'm going to go ahead to call, and I'm going to choose an expiration date. Let's go ahead and get an expiration date for this. And the expiration date I will be using is going to be June 18th, 2026. And that's going to give me around 311 days to expiration. The reason I'm going to take 311 days to expiration is because I actually want to buy myself enough time in order for this stock price to start going back up. Now, it may not take 311 days, but I want to give myself that amount of time in order for the trade to work in my favor. So once again, buy, call, June 18th expiration date, 311 days to expiration. Now, we're going to go ahead and choose our strike price. And I'm pretty sure you guys figure out the strike price by now. The strike price I will be going with is going to be the strike price that coincides with the hard level of support. And as we established, that was around the $50 range. So I'll be going with the strike price of $50. Once again, can the share price go lower than $50? It most certainly can, but that is a risk I'm willing to take because I've established the stock has way more upside than it has downside, and I gave myself enough time in order for the share price to appreciate in value. Now, because this is a buy call, I'm going to have to pay to enter this option contract. The amount of money I'm going to have to pay to enter this contract is going to be $13.25. As you well know, or you may not know, each option contract contains 100 shares. So the amount of money you actually have to pay is going to be your $13.25 here multiplied by 100 shares. So you're going to be out of pocket for $1,325 in order for you to buy this option. By buying this option, this gives you control over 100 shares of the stock. Remember, you do not own 100 shares. However, you do have control of 100 shares. Now, how do you win with this trade? It's quite simple. Now, once you get this option in your portfolio, you could do two things. The number one thing you could do is do absolutely nothing. The whole point of getting into the long call option strategy is that you buy a stock that's been beaten down. Now, it must be a good stock, first of all. You get the stock when it's beaten down, and you simply have patience and wait for the share price to appreciate in value. Once the share price appreciates in value, so too will your options go up. Exit strategy. Feel free to, once the share price goes up, feel free to close this option at your own convenience whenever you think you have materialized a certain profitability that you agree with. So for instance, if the share price does move from 53, let's say to $60, that's going to be a $7 move. So your option is going to be up big time. And let's say you decide to yourself, right? I have gone ahead and made enough money. I'm going to exit my position. Go ahead and exit the position. If you have to second guess yourself and you just say, should I exit now? Then the answer is exit now. Anytime you have to second guess yourself with any option strategy, get out of it. The whole point of doing options and making money consistently is you need to have a calm mind, and that takes off the emotion out of you trading. Now, for those of you that's unable to sit on your hands and wait for that to materialize, here's something else you can do. While you have this long call in your portfolio, you could now use it in order to make consistent income, because now you're able to control 100 shares of the stock. Now, you're going to go to sell, you're going to go to call, and now you're going to choose a closer expiration date. For me, I will be using monthly expiration date because I don't like to keep my eye on my computer or on my phone. I like to set these trades and forget it. So the strike date I'm going to be going with is going to be September 12th, and that gives me 32 days to expiration. Hence, this is going to be a monthly contract. Let's go ahead and select that. Now, we are assuming we have the long call in our portfolio, so we're going to use that as collateral in order for us to go and sell this call against it. This new option strategy here is going to be known as a covered call. So we're going to be selling monthly covered calls against the Tradedesk long call that we secured in our portfolio. So now I'm going to go ahead and choose my strike price. Now, if you are new to options, it's just a rule of thumb. If you are new to options, try your best to choose a chance of profit right here of anything above 80% and above. So I'll be going with the $60 strike price right here, and that's going to give me an 83% chance of profit. Meaning there's a 17% chance that this trade is going to go against me. Now, because this time we're going to be selling, we're going to be receiving income, and this is how you use this option in order to make consistent income. The income I will be receiving is going to be $1.02, or in the real world, that's going to equate to $102. So now you have a long call in your portfolio and you're just sitting and waiting for the share price to appreciate in value before you exit this option. The next thing you're going to do, you're going to sell monthly covered calls and you're going to be making consistent income of around $100 every month. And that consistent income is what you're going to use in order to grow your portfolio. Now, remember, exit strategy. If this share price right here does go ahead and go past your $60 mark right here, your $60 strike price, you do not have to worry. If you are trading with Robinhood, Robinhood is going to close out your long call. They're going to close out your covered call, and the difference, they're going to deposit the money in your portfolio, and you will be getting a credit, because if the share price goes above the strike price, I guarantee you, you're going to be getting a credit. Now, before the month is over or close to the month, this share price, like I mentioned, can go down further. So if close to expiration date or at expiration date, this share price is below this $53 or trading at the $53, then your entire options contract is going to be down. Your long call is going to be down. But remember, you gave yourself 311 days. So even if you are down on your contract, you have more than enough time in order to be patient and wait for the share price to appreciate in value. Now, that's one end of the spectrum. Here is the other end of the spectrum. If that happens, then this option now, which is your sell call, is going to expire worthless. Meaning you're going to pocket this and you're going to get back your long call that you use as collateral in order to do this option strategy for the following month. Hence, you rinse, you repeat, you keep growing your options portfolio. So there you have it, investors and future investors. I know whenever a stock falls drastically like that, people are always afraid. And it's okay to be afraid. It's okay to be a bit resistant. But go ahead, do your own due diligence. And if you do enough research on whatever stock it is, if you think that that stock is a good stock and the share price is going to appreciate in value, then go ahead and feel free to use whatever option strategy that meets your fancy and is aligned with your portfolio goals in order for you to grow your portfolio. For me personally, that is how I'm going to be treating the Tradedesk. I do not hold stocks in my portfolio. I'm predominantly an options trader. Well, I do hold stocks, but it's all dividend stocks for passive income. So since I don't like to hold stocks, I would not be buying 100 shares. But if I did hold stocks, I would definitely pick up 100 shares of this at this price in order for me to do options with. So personally, I'm going to be buying a long call, or otherwise known as a leaps option, in order for me to go ahead and sell monthly covered calls in order to grow my portfolio over and over again while I wait for this price to appreciate. Now, if you guys have any questions about a Tradedesk, what is happening to it, If you guys have any questions about the long call option strategy I demonstrated today, or any questions about the monthly covered calls in order to make consistent income, let me know in the comments below. Now, if you guys are still here, you guys are the real investors and future investors. And if you haven't yet, now would be the perfect opportunity in order for you to go ahead and like the video, subscribe to the channel. Make sure to hit that notification bell to get an alert when I post this video. But here's the most important thing. Feel free to share this video with someone you think that can benefit from its content. Someone that's struggling to grow a small account portfolio. We try to help as many people as we can together in order for them to make some extra income with options trading. And eventually, maybe they could able to retire and make income only from options trading. That's my goal for everyone. Now, until the next video, keep pushing your investments.